Bitcoin is sitting near its lows, and there has never been more money in the world than there is right now. For 15 years, when the money supply went up, Bitcoin went up with it. That relationship was so reliable that people built entire models on it. That relationship just broke, and nobody on your feed is talking about why. I'm going to walk you through 4 disconnects that are open in this market right now. 4 places where Bitcoin has separated from something it normally tracks. I'm not telling you what to buy. I'm showing you what the data is doing and where the disagreement is. Let us go. The first one is the liquidity gap. Global M2 money supply is at an all-time high. M2 is the simple measure of how much money is sloshing around in the system. Cash, checking account, savings, the easy stuff. When central banks loosen, that number climbs. Historically, Bitcoin followed that line with a lag, roughly 3 months behind, give or take. The money got printed, it looked for somewhere to go, and some of it landed in risk assets. Bitcoin was the furthest out on the risk curve, so it moved the hardest. This cycle, the line went up and Bitcoin went sideways and then down. The gap between them is now one of the widest we have seen since 2020. Here is what that means. Either the relationship is dead or the relationship is late. Nobody can tell you which one from a chart. The second one is the flows turned and nobody announced it. For months, the spot Bitcoin ETFs were bleeding, money going out, day after day. Some of the biggest names on Wall Street with approved products, and the net direction was out the door. That selling pressure was real and it was mechanical. Redemptions mean coins get sold. It does not care how you feel about the technology. That has stopped. The outflows flattened out and the net direction has started to turn. Quietly, there is no press release when it flips. There is no headline that says the sellers stop selling. That is the thing about flow data. It is the least emotional number in this entire market and it gets the least attention. Price gets the attention because price is a story. Flows are just plumbing, but the plumbing is what actually moves the price. Quick thing before disconnect 3, because 3 is the one that most people get exactly backwards. Drop a comment right now and tell me one thing. Are you accumulating, waiting, or out? That is it. I read these and it tells me what the retail side of this market actually looks like, which is data I cannot get from any chart. Okay, disconnect 3, the sentiment inversion. Go back to the top. Bitcoin near $126,000. And what was everybody saying? Super cycle, institutional adoption, 150,000 by year end, 200,000 after that. Celebrities who had never mentioned Bitcoin in their lives were suddenly experts on it. That was the top. Now look at right now. The same ecosystem that was calling for 200,000 is calling for 40,000, 45,000. Some of them are floating 35,000. This is the oldest pattern in this asset. Price targets are not forecast. Price targets are a measurement of how people feel dressed up in a number to look like math. When the targets get extreme in one direction, the crowd is already positioned in that direction. And a crowd that is already positioned has no buying power left to push it further. I want to be careful here. This is a pattern, not a law. Sentiment has been at extremes before and price went lower anyway. Bear markets in this asset have historically drawn down 80% or more from the top, and we are not there. So treat this as a signal, not a guarantee. Disconnect 4. The equity split. US stocks are printing all-time highs. The Nasdaq, the S&P 500, even the Russell 2000, the small cap index that is supposed to be the fragile one, has put in a strong run. Bitcoin has always been correlated to that risk basket. When American investors felt rich and confident, Bitcoin went up. When they got scared, Bitcoin went down harder than anything else. Right now, the risk basket is euphoric and Bitcoin is not participating. That is disconnect number 4, and it is the strangest one. Bitcoin is not behaving like a risk asset and it is not behaving like a safe haven. It is behaving like something that is being ignored. Assets do not get ignored forever. Now why this could all be wrong? Now let me argue against myself, because you deserve that. Every single one of those 4 disconnects has an innocent explanation. M2 might not matter anymore because the marginal buyer changed. When Bitcoin was small, loose money found it. Now it is a large asset held heavily by institutions who allocate on mandate and rebalance schedules, not on vibes about liquidity. ETF flows turning positive for a few weeks is noise until it is a trend. Flows have head faked before. Sentiment being bearish is sometimes just correct. Sometimes the crowd is bearish because things are actually bad. The crowd is not always wrong. It is only reliably wrong at the true extremes, and we do not know if this is one. And the correlation to stocks breaking might mean Bitcoin is being repriced as a smaller, more mature asset with lower expected returns. That would be a permanent change, not a temporary gap. If you cannot hold both of these in your head at once, you are not analyzing, you are cheering. Now here is the part that keeps me from dismissing the bull case. Look at what happened around the last halving. The old rule was simple. Halving happens, supply of new coins gets cut, price makes a new all-time high some months later. Last time, Bitcoin made its new all-time high before the halving. The market front-ran its own catalyst. That is what mature markets do. They stop reacting to events and start pricing them in ahead of time. The information gets absorbed earlier every cycle because more sophisticated capital is watching. So when I hear the entire market agreeing that the bull run starts in September or October or after some specific event, I get suspicious. Not because they are wrong about the catalyst, because they might be right about the catalyst and wrong about the timing. If everyone knows the date is already in the price. Before I give you the 3 things I'm watching, which of these 4 disconnects do you think is the most important? Tell us in the comments. I will pull the most common answer into the next video and go deep on it. I'm not going to give you a price target because I just spent 2 minutes explaining why price targets are sentiment in a costume. Here is what I'm watching instead. 1. Net ETF flows over the next 4 to 6 weeks. Not one good day, a sustained positive trend. If the flows turn and hold, that is the most concrete evidence available that the institutional bid is back. 2. Whether Bitcoin starts responding to equity moves again. If stocks have a down week and Bitcoin drops harder, the correlation is alive and the disconnect closes the ordinary way. If stocks drop and Bitcoin holds, something structural has changed. 3. The tone of the price targets. Watch for the moment the mainstream targets stop going lower. That inflection tends to arrive before price does. Now it's your today's task to do. Do not take my word for any of this. Go pull the ETF flow data yourself. It is published daily and it is free. Look at the net number, not the headline about one fund. Pull up an M2 chart next to a Bitcoin chart and look at the gap with your own eyes. And write down today's date and today's price somewhere. Then write down what you think happens next. In 3 months, go read it back. That exercise will teach you more about markets than any video will, including this one. The story you are being sold right now is that somebody knows where the bottom is. Nobody knows where the bottom is. What we actually have is 4 measurable disconnects between Bitcoin and things it normally tracks. Those gaps close eventually. They always do. They can close by Bitcoin going up to meet the data or by the data coming down to meet Bitcoin. The disconnects tell you a move is coming. They do not tell you the direction. Anyone who tells you they do is not showing you data. They are showing you their position. Everything here is analysis, not financial advice. Do your own research and never risk money you cannot afford to lose. If you want the daily flow numbers and the news as it breaks, the Discord is free and the link is in the description. One click and you're in. I will see you in the next one.